And we're live. Real Estate Exposed. Phil Tarrant, Tom Panos,
Hey
gearing
Phil,
up.
how you going?
Head out. Lockdown is just behind, just in front of us, mate. And they've just announced kids are going to go back to school a week earlier. That's good for a lot of people.
So Phil, if you bring me up to stage, I am travelling at the moment for business. I haven't been across all the information in the last 24 hours. But Phil, what are you saying that we've got a clear resolution on school returns? What date's that?
I believe it is about the 16th or 17th in New South Wales of October. So literally sort of 3 weeks away, which is good. I just saw some information coming in then. The Australian has just reported that the vaccine rollout also seems to be underway and under control. It's going to hit the targets required in order for us to sort of emerge out of this lockdown. The big date for us here at Momentum Media is the 1st of December. At that point in time, we can pretty much go back to how business was prior to this most recent lockdown. So exciting times, getting Australia back to business, get the economy firing as we gear up for the summer season, mate. So a lot of good news. That said, yesterday was the worst day in New South Wales for the whole time of this virus in terms of the death rate. So, it's just about living with the virus moving forward. And that's the rhetoric coming out of government. And I think that's what everyone's going to have to embrace.
Yeah. So one of the most common things I'm asked at the moment, Phil, by the real estate industry is they're trying to manage open for inspections, on-site auctions, and what the plan looks like. So if you can imagine, people have got into a bit of an operating pattern using Zoom and using private inspections. But they clearly have vendors who are saying, we don't want that. We want on-site. We want open for inspections. And I'm getting agent after agent saying, when do you think that's going to happen? And it's a bit of a predicament for people because they need to operate with plan A, but understand that they've got to shift to plan B because we know when it happens very, very quickly. So, Phil, to all our listeners and viewers, no one knows the answers to that. So I think what you've got to do is you move forward playing the ball as you have right now. But if you can, like I've started, to allow an hour in between auctions, because if it means that on the 18th of October, we're able to do on-sites, I've got to allow to drive to those, right? And real estate officers need to understand this, Phil. The minute that Gladys or Daniel Andrews or whoever is making the decisions in their part of the world, they're going to be bombarded with a lot of listings, Phil. And you've got to be able to be in a position to manage those listings. And don't get me wrong, for many people that watch this and listen to us who are real estate people, listings is what they live with. It's their number one objective. But I actually think, Phil, that we are now entering a marketplace where we're going to have more listings than we've ever had in the last couple of years. Man, people are coming in and they're agreeing with it because they're out there in the field themselves and they can see that that's what's happening. Phil, there's a lot of stock about to hit the market. I've got to tell you, I'm a little bit nervous with the amount of listings that are about to come on, layered with the headlines in the last 48 hours about APRA wanting to slow things down. There's been more negative press in the last few days than what there's been for months in real estate.
Yeah, well, the RBA sort of hinted its nervousness around the rapid price growth in property. We've seen the Treasurer come out, echo some of those sentiments. You've seen John Simon from Aussie fame in the headlines recently, sort of flagging this growth is also a bit worrisome. So we've been chatting about it for a little while, Tom, whether or not there'll be some sort of APRA intervention at some point in time. The big headline now is around mortgage stress and the potential for mortgage stress into the future. To your point around listings coming on, I think there will be a spike in listings. The immediate period straight after this lockdown lifts. However, how the property market plays out into the future, who knows? RBA has said that it won't lift rates until 2023, 2024. That's what they're saying now. at the moment in time. Whether or not that changes in the years ahead, who knows? They've got the sort of the dichotomy of managing inflation but still simulating economic growth. They want people spending money. They want Australians to feel as though they can go out there and continue to create wealth through making investments, but they've got to keep a hold on everything. They can't have rapid price growth because it will fracture the market eventually. So my view is that you're going to get a huge spike in listings, and that will probably burn for about 6 months or so. Then it's going to come right down. Now, what they did last time around to try and take some of the heat out of the market, Tom, was to really focus on property investors. So APRA, so the prudential regulator, put caps on how much the banks or lenders could increase the size of their investment book. So they just made it harder for investors to get money. Now, the impact was pretty hard for a lot of property investors. It also slowed the market right up. We saw those dips in prices in Sydney, Melbourne in particular. Now, the argument at the time was this was nationwide intervention by the regulator to try and control a handful of markets. Perth back then was struggling, right? But Perth was also impacted by this sort of universal application of messing around with macro economics. So this is going to play out. The government doesn't want to see too many Australians going into too much debt at this point in time with record low interest rates, buying outside or above their means and getting to a point in time where they can't afford their mortgages. You need to remember, you've probably seen it, you're a property investor, Tom, a decade or so ago, coming out of the global financial crisis, GFC, 25% increase, 0.25% increase, 0.25, 0.25, 0.25, 0.25. It hurt a lot of Australians and they started struggling with their mortgages. So as much as possible, the government wants to try and avert that. Now, it's probably going to target investors to try and get them out of the market to take some of the heat out of it. It will happen. Is it going to be straight away? No, but watch this space. For real estate agents, I'd be looking as much as possible to capitalise on this listing surge that's going to happen come the middle of October. And I'll make this promise to you, Tom. I will be there in person at your first auction in Sydney, which is what I did last time around. I remember it vividly. With someone had sprayed white circles on the lawn to make sure people stayed in their lanes.
Yeah, 1.5 metre circles spread apart, and I remember you were there. Your partner was there as well, and the property sold. But I want to ask you, Phil, I can't help it but notice the properties that I'm auctioning at the moment. Most of the people that are buying those are not investors, but so what tools would APRA have to actually, it's an interesting one because on the one hand, you don't want to use interest rates because it'll affect other bits of the economy. Yeah. On the other hand, you want to affect, it appears, Sydney, Melbourne, particularly prices, right? Sydney, Melbourne, and then the other suburbs and then other cities, Brisbane and Adelaide's been going gangbusters, what have you. How do you actually slow down owner occupiers? Is it the same sort of tools that you would use as you would do with investors?
I don't think so. I think it'd be very difficult for the government to intervene to make it a disincentive for Australians to buy a home to live in. I think you're sort of targeting the fundamentals of Australia, right? People want to own their property. And let's remember also, most people's paradigm with property is to buy a home to live in. Only I think 8% of Australians claim some sort of deduction on their tax return for property investment. So let's remember, most people's relationship with property is I buy a home, I live in it, I pay the mortgage down, and when I retire, I'm debt free. That's most people's paradigm. So the Australian government's not going to mess with that too much. What may happen, the banks don't necessarily want to get on the wrong side of APRA and or the government. Now, banks are in the business of lending money. That's how they make their money. It's one of the reasons why Australia is so strong in our banking system, has been able to navigate huge fractures to the economy like the GFC. We have a strong banking system driven by mortgages and home loans. We were all, if you've got a super fund or a retail or an industry fund, guess what? You're probably invested in banks. They're good assets and they're a good way for them to generate money is through mortgages. So banks don't want to rock the apple cart too much and get on the wrong side of APRA. However, banks will and can just make it a little bit more difficult for people to secure or get a home loan. Just because the RBA might be running at record low rates, it doesn't mean that the banks won't move outside of cycle and start lifting rates or change their serviceability requirements. And this is the key thing around mortgage stress at the moment. They're worried that people are taking on too much debt, but they might be able to afford the debt now, and they might only be paying 2.5, 2.7, 2.8, 3% interest rates. They can afford the debt now, but if that raises up to 3.54, 4.55, that's where we have this issue around mortgage stress. So I think the banks will just be a lot more prudent. Yes, they're going to get tapped on the shoulder by APRA and the other regulators and say, maybe just slow it down a little bit, and they'll do that before there's any formal intervention around it. So that's my view. However, with property investors, there's a lot of ways that you can slow that down completely, and that is putting a cap on how big or how much more you can grow your actual lending to property investors. That's what happened last time. It's pretty easy intervention. It pisses off property investors, obviously, because it's harder for them to get debt. And let's remember, property investment is a game of finance, largely. However, that gives more opportunities for owner-occupiers. The key thing is around housing affordability, Tom. They want Australians to be able to afford their house to live in. Remember, that's most people's relationship with property is a house to live in. Nothing's going to happen yet. The flag's been put up. There's been a lot of rhetoric around it. We've seen this through the coronavirus pandemic, Tom, how headlines can change so rapidly inside of the media. One day, don't buy property, next day, buy property, next day, don't buy property. Makes for headlines. I think steady as she goes, buy within your means, borrow within your means. The responsibility still rests with the person who is taking on the debt that they can afford the property that they're buying, irrespective of how things might change into the future. That's prudent. That needs to start and stop with the buyer or the investor. However, there is oversight. So interesting times, mate.
So one side to it all, Phil, is that if you are an investor, you might be in a position where you can borrow more money this quarter than what you can next quarter. And that's something you should be mindful of, like the affordability. So if you are someone that's comfortable with your cash flow, you might want to take advantage of easier lending now than harder lending later, which might give you a better option of the things that you can buy. Because, Phil, if all that's going to happen is that investors are going to find it more difficult to borrow money, it can mean that there's just going to be more opportunities, as you said, for the owner-occupiers. So, if you're an investor now, I'd suggest you speak to your broker. Phil, I want to change.
So just on that vein, Tom, quickly. So you're an auctioneer. So the question for you, amongst other things, obviously, but do you prefer to have 50 people at an auction or 10 people at an auction? What's better for you?
I think overall I prefer 50, because I think if there's 50, the probability of having more people that are going to bid at the pointy end is going to be significantly higher. I mean, if you ask me, what I really, really want as an auctioneer is 2 people that won't give up. That's the basis of it. If you could get 2 people that say, I'm not going to get off this treadmill till I die, right? You know that you've got 2 people that are going to go up and up and up. How's the probability of getting that? More people. More bidders equals more competitions equals more probability you're going to get a bidding frenzy. But I've got to tell you, Phil, there are a bunch of real estate agents, and I'm going to put it out there to them, this thing about quote them low and watch them go, where you just go collect 50, 60 bidders at unrealistic prices that was never going to buy a property, needs to stop. Because I actually, I've actually been someone on that side of the fence recently, and, you incur legal costs, you incur, due diligence costs, right? Now, I totally get it. To the real estate agents that are watching this, I totally get it. When a property goes off the charts because there's a frenzy, because it's gone more than what you've quoted the vendor, hey, that's great marketing and that's a great auction. The issue is when you've actually got the deceptive practice of having a different figure that you've told the vendor and a different figure you're telling the market to accumulate buyers. I heard a terrible term during the week. Terrible term. Quote them low, watch them grow. Quote them high, watch them die. And that's appalling, right? Quote what the property is worth. Quote what you've been talking to the vendor. Have transparency. And, Phil, I'm a very strong believer that one of the reasons the real estate industry has got a bad reputation is that every month people around Australia and New Zealand go to properties, fall in love with them, miss out on them, get mentally devastated, and get commercially impacted, right? And I just think that practice needs to stop. It gets highlighted. It gets highlighted when there's a boom market because you do get genuine crazy results. But Phil, we've got to look, and I know that you've been very proactive this week. I didn't read the whole story, but you're an ambassador, and your organisation are flying the flag every day to try and improve the attractiveness of the industry, right? The attractiveness of the industry. And an attractive industry means that buyers will like it better, sellers will like it better, there'll be more trust, there'll be more transparency. But Phil, I've never seen you get so vocal about a point as what you did this week. It was, I think it was Monday was the story, a big photo of you on my REB newsletter that I get at around 7:05, 7:20, most mornings. And I thought the way the way you were positioned in that article, it was like you were the part of ICAC, right? Saying, hey, we got to do something about it. But 20 people. So the story for those that didn't watch, 20 cases of trust account fraud in the real estate industry were identified. How did that? So Phil, were they all in a recent time? How did that come about? That story?
Yeah, well, it's over a period of time. This is New South Wales Fair Trading. So, is it fraud? What's your definition of fraud? This essential story was around they weren't getting their trust accounts audited. So they were playing outside of the rules, and a number of them have got fined, and a number of them have been banned from running trust accounts for property management. That's a huge issue. To your point, Tom, it's a real privilege what we do here at REB or Smart Property Investment or the wider Momentum Group. We're highly involved in property. Is that we can talk about the issues without bias or agenda, other than supporting and promoting a stronger real estate sector and a stronger real estate professional sector in Australia. We're right behind the real estate industry, real estate agents, property managers, buyers agents, and that expands out to connected industries like mortgage broking, conveyancing, etc. The professionals that power real estate in Australia is in many ways driving the heartbeat of the nation. We are a property economy. Our prosperity as a nation is largely driven by, in some part, the strength of our real estate sector. So those professionals who support it are there helping Australia to thrive into the future. And what a great place to live. So when I see stuff which can be avoided, and that is a very small fraction, a handful of agents, property managers who aren't doing the right thing, impacting on the great work of every other person, every other professional in real estate who is doing the right thing, I think someone needs to stand up and actually put their hand up and say, you know what, there's got to be a better way. So that was the thrust of my story. And much like you, Tom, we get to navigate this great industry and this great sector that we work within. And we can both do it. We do this particular show, and, we're the masters of our own domain. So someone needs to stand up and support real estate sector. We've got, obviously, industry groups. We've got REIs, NSWs and Victorias and stuff who do great work, but it's largely fragmented. You've got really good franchise groups who look after their members, but you've got a whole bunch of people who don't operate within that domain. So I think it's great for people like myself and you, Tom, who can universally look after this sector and help promote this sector and help drive it forward today. But how do we attract the best talent into the future? You made a reference about one of the reasons why people don't like real estate agents. Well, let's keep driving it. Let's try and eradicate some of these fringe areas of real estate, which is not conducive to better outcomes. And that's the end result: better outcomes for buyers, sellers, property managers, the customer. So that's the view. You can go and check out the piece. By memory, it was called Counting the Cost of Trust Account Abuse. Just my view.
Phil, if you can, on my social media, get one of your team just to put the link as a comment below. I'd like everyone to have easy access to read the article. But you know, Phil, my 34 years in real estate, every couple of years I come across trust account stories. Sometimes there's 4 in a year, sometimes it goes quiet for 2 years. Here's what I've learned. Generally speaking, people that break the law in regards to their trust accounting responsibilities are doing it because they're looking at a band-aid solution. They're generally not taking the money and leaving Christopher Skase style, right? They're not doing that. What they're doing is they've caught themselves up in a problem. It could be that they've got a drug problem. It could be that they've got a gambling problem. And what happens is, as last case scenario, they say, I'm going to borrow this money, but I'm going to put it back in. That's the thinking of a real estate agent that touches the trust account. I'm going to take that money, but I'm going to put it back in. And sometimes they do it. I've had instances where a client has told me, Tom, I did it because I just needed a short-term fix, and it was better than bridging finance on a development that I was working on. They were going to settle, and I was going to put the money back in, right? So there was no intent from them in their minds to actually, you know, take the money and steal it. It was more like borrowing it. But Phil, the word says it all. Trust. Money is given to you in trust, right? In trust. Money is not given to you to borrow it. It's given to you to hold in trust until a settlement, until you disperse the money. And I know that there's a lot of technology tools, Phil, that are out there now. Managed is one that you've spoken about in the past, which enable clearer transparency. And in fact, I think, look, I don't know all the ins and outs of every product out there, but I think the managed one actually doesn't have a trust account. Is that right?
Yeah, direct and instant payments. And for disclosure, I'm an investor in that business as well. I'm passionate prop tech investor. But
what a good man. So you can tell he's an editorial person straight away. he brings the ethical bit into it.
Well, the thing is, I believe so much in this, Tom, that there is a better way. And my key point also in this article wasn't just necessarily, hey, come on, real estate sector, let's get this right. The other point was, and this is particularly for property management professionals, there is I think there's 2.7 million properties in Australia for investment purpose, property investment properties. 70%, and these numbers are sort of thereabouts, 70% are managed by property managers. So there's 2 million properties managed by property managers. There's 700,000 which are managed individually. Now, there is sort of DIY platforms emerging for those people that want to manage individually. And guess what? They're trying to pull people away from property managers to do it individually. Now, that's a big concern for the property management sector. So we want property investors. I'm a property investor. You're a property investor. My view is that the best person to manage your property is a professional property manager rather than doing it yourself. That's my preference. And that's the preference of 70% of all property investors. I'd like to see that number grow personally. However, when you see stories like this coming out and those investors who are on the fence, they might go, you know what? This trust account thing, I don't necessarily want to go down that pathway. I'll do it myself. I've got this technology platform now to do it. So the property management sector wants to manage investors' property. They don't want them doing it themselves. And I think that's a universal motherhood issue that we all should get behind. So better outcomes for property investors, disconnected from it. You've got someone looking after it. You're probably getting better rentals for it, all the other stuff. And I touch on it in my article, Tom, but it's really saying property managers are the right people to be managing your property. Do it the right way.
And I've got to say to everyone on this final point as we finish our live stream, Real Estate Exposed, coming to you every Thursday. If you want to get depressed, if you want anxiety, let me give you the blueprint to it. Manage your own property. It is a recipe for disaster. It is the thing that will turn you off from building a property portfolio. Because if every phone, trust me, your tenants don't ring you up to wish you happy birthday. Your tenants ring you up to tell you that it's going to cost you money every time they speak to you. Your tenants will ring you at all sorts of the day. Not only that, you're not going to have the professional advice to have a fair rent, you often become emotionally involved. And I can't get over, Phil, how many landlords under rent their properties because they say they're really nice people. They've been with me for 15 years. And what happens is you put it on the market to sell it and you show the rental history to a buyer, and straight away that buyer gets affected. They'll say, you know, this is under rented, and I know that what you're saying, but you know, as far as I'm concerned, I'm working off the data. I've got to give these figures to my mortgage broker, right? Yeah. Anyway, Phil, we'll talk further about it. Stay well. Let's face it, lockdowns are leaving. Freedoms are coming. It's in the air. We know it. I'm actually spent my first night away from home in 6-7 months. It's quite good. Don't get me wrong. I love my family, but homeschooling's got an expiry date. Mine expired about 2 days ago. All righty. Thanks a lot, Phil.
Thanks, Tom.
Thank you.